The world that I'm seeing is a world where Google generates $1 billion a month, and they send $1 billion a month to Citibank or JP Morgan, and they say, buy $1 billion of Bitcoin, and it's like a billion, now it's $2 billion a month. Then Meta sends $1 billion a month, and Microsoft sends $5 billion. These are the high power rails, right? These are the rails that move $1 billion a day, maybe $1 billion an hour, maybe $1 billion a minute, right? And when we get there, then I think Bitcoin takes its next leg up.
At the beginning of the year, the U.S. Securities and Exchange Commission approved several spot Bitcoin exchange-traded funds, opening up access to thousands of institutional investors to invest in the leading cryptocurrency for the first time in 15 years. This was a historic moment for not just Bitcoin, but the entire cryptocurrency and digital assets space. It started a whole new conversation about the role of cryptocurrencies in the traditional investment scene, especially with the participants of big Wall Street players like BlackRock, Fidelity, Millennium Management LLC, and others. It also increased expectations about the performance of Bitcoin and other cryptocurrencies during the 2024 and 2025 bull market. Several prominent analysts predicted that as tens of billions of dollars are pumped into the cryptocurrency market through the ETFs, Bitcoin's price will increase significantly, and the leading cryptocurrency will easily make new record highs after record highs. So far, the reality has been a little bit disappointing. Since making new highs of $73,000 in March, Bitcoin has pretty much been trading in the same range, and investors are beginning to get antsy about what's next for the largest cryptocurrency by market cap. According to MicroStrategy founder and executive chairman Michael Saylor, there is absolutely no need for concern, as we are right on track for those huge price expectations we all had earlier in the year. During another iconic fireside chat at the Bitcoin 2024 conference, alongside Bill Miller IV, the renowned business executive and billionaire investor lays out 3 important events that he says will immediately take Bitcoin from where it is today to where we all want it to be. Saylor is predicting a massive 100x increase in Bitcoin's price in the next few years, particularly because the early phases of these 3 events have been activated. Saylor is 100% optimistic that the rest will fall into place in no time, taking Bitcoin from just over $60,000 to millions of dollars per coin. We will now bring you clips from Saylor's insightful discussion about 3 key regulatory shifts that could 100x Bitcoin adoption and bring in multi-trillion-dollar giants like Apple, Microsoft, and Google. Please watch to the end, share and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for the support and enjoy the video.
I think that there's the big 3. There's 3 policies that accelerate us to institutional adoption. That 3 things that take Bitcoin up by 100x from where it is today. The first thing is to legitimize and accept and endorse it as an institutional grade asset. So fair regulation of the asset itself in the securities industry. And in January, we got the first installment of that with the approval of the spot Bitcoin ETF, but it was an incomplete regulation because the SEC still denies in-kind creation of ETF shares. And the SEC still denies the ability to trade options on top of spot Bitcoin ETF shares. And the acceptance was given grudgingly, it was basically, I did it because I had to do it, but I didn't like it, okay? So what's the significance of that? The negative opinion expressed when the approval came, that sits as a shadow over a lot of mainstream investors. We need to flip from a negative opinion to at least a neutral opinion. Like, why is it that a federal regulator isn't expressing an opinion that this asset is good or bad versus that asset? So I think that that's got to change still. I think that the lack of in-kind creates and redemption means that it's a taxable event if I want to contribute Bitcoin or withdraw Bitcoin from an ETF. So if you were to like invest in an ETF and it 10x'd, and then you wanted to take your Bitcoin in self-custody, you're getting charged 30% of the Bitcoin. If you wanted to move the Bitcoin from an ETF to a bank or to another custodian, you're getting charged as if you sold it, even though you didn't sell it. So right now, there's a tax inefficiency. The second plank is fair accounting. If I wanted to keep you from buying anything, I would establish an accounting rule that said you can only lose money on the trade, but you can never make money. And that's a one-way ratchet. If I actually set up an accounting system where you always lose, you never win, and if you win, you have to act like you lost. And then if you lose again, you could win 99 times, but the 100th time you lose, you report one loss, no wins. Okay, that's just prejudicial and hostile. Okay, so indefinite intangible accounting allows you to lose but not win. And it's the kind of accounting you give to things you don't want people to buy. And so fair accounting was critical. And this January, it became optional. And next January, it will be mandatory. And so that's a big step forward. Let's just say we're 75% of the way along there, but we'll be sort of at 100% when you have 24 or 36 companies and they're all using the same fair value accounting and everybody's talking about it. And you start to see companies report multi-billion-dollar or 10 mega-billion-dollar gains on that accounting, right? That'll be a big deal.
The repeal of the SEC's SAB 121 accounting rule is the third regulatory shift Saylor is looking forward to. The Staff Accounting Bulletin 121 is a guidance document released by the SEC in March 2022. It requires public companies to record the fair value of digital assets on their balance sheets, which deviates from normal accounting treatment of custodied assets as off-balance sheet assets. SAB 121 advises financial institutions like banks that if they hold crypto on behalf of their customers, they should report their customers' crypto as a liability on their balance sheets. In essence, the guidance mandates firms and centralized exchanges to publicly disclose the amount and nature of crypto they hold on behalf of customers. The accounting rule has received a lot of criticism from cryptocurrency investors because it effectively prevents regulated banking organizations from offering digital asset custody to their very wealthy clients. Saylor believes this needs to happen for large tech companies like Apple and Google to start buying Bitcoin and holding it as a reserve asset. During his discussion with Miller, the MicroStrategy boss adds that when this final piece of the puzzle falls into place, tens of billions of dollars will spill into Bitcoin at a fairly regular pace. Here are more clips from the discussion.
The third is if individuals aren't allowed to self-custody, that's hostile to Bitcoin. If I pass the law saying you can't custody, that's an attack on Bitcoin. If companies can't self-custody, that's an attack on Bitcoin. If I had a company whose job was to sell custody services to institutions, if I provided custody to Yale Endowment or to a big hedge fund, and then if the government had a law that made it illegal for the custodian to provide custody for your asset, that's hostile. So right now, SAB 121 is a rule that basically makes it impossible for a bank to custody Bitcoin. And the right way to look at it is, well, that's basically a regulation preventing companies that want to custody from custodying. And so the result of that is you have basically the government saying, I guess you can buy the ETF, but the ETF is not allowed to use their bank to custody the Bitcoin, and they can only use a crypto exchange to custody the Bitcoin, and we're going to sue the crypto exchange. And so when you have the government hostile to the crypto custodian, hostile to the banks, hostile to the institutional custodian, you're kind of, you're undermining the ETF industry. So the third plank is we just need for the SEC, the OCC, the FDIC to allow banks like JP Morgan and Citigroup and Goldman. But by the way, you might not like JP Morgan because of what the CEO has said. But let me guarantee you that within a year or 2 years of when it's possible to custody Bitcoin, JP Morgan will start a process to do that. And within 4 years, they'll be custodying Bitcoin because it's money and that's what they do. So you want a world where Goldman Sachs, Morgan Stanley, Citigroup, JP Morgan can custody Bitcoin, because if they can custody it, they can buy it for you. And if they can buy it, they can sell it. And if they can buy it and sell it and custody it, they will give you a loan on it. And they will also give you yield on it. So the world after the banks can custody Bitcoin will be, I could have Bitcoin at a bank too big to fail, backed by $1 trillion balance sheet. They would give me 500 basis points of yield. You know how much money you get if you put your money in T-bills right now? You get 550 basis points risk-free. I think that the banks will give Bitcoiners 550 basis points risk-free when they can custody the Bitcoin. And so the world would be very different if you got paid 5% interest on your Bitcoin while you're actually holding the Bitcoin. And I think the other thing is they will give you a loan at SOFR, which is 550 basis points, plus 50 basis points spread. So you can get a loan of 6% from Citibank or Bank of America when they can custody the Bitcoin. And then the third thing is, they'll let you post the Bitcoin as collateral against your house or a mortgage. And you'll be able to I think, refinance your mortgage maybe to 100% loan to value or 120% loan to value by putting the Bitcoin as collateral.
During an earlier keynote speech at the conference, Saylor delivered another super bullish price prediction for Bitcoin. Saylor gave his macro Bitcoin forecast for 2045, giving a bear case, a base case, and a bull case for the leading cryptocurrency. In 21 years, Saylor expects Bitcoin's price to appreciate at least 4,300% from its current price of $68,000 to $3 million per coin. That's the bear case, or a worst-case scenario for the leading cryptocurrency. Saylor's base case for Bitcoin is that it hits $13 million by 2045, a 19,000% price explosion from current prices. This will put Bitcoin's market cap at $280 trillion, a 280x increase from the current $1.3 trillion market cap. Saylor's bull case is even more bullish at a massive $49 million per Bitcoin by 2045, which will put the cryptocurrency's market cap at over $1 quadrillion. Please share your thoughts on Saylor's predictions for Bitcoin in the comments section below. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for watching.